Let's say we believe the stock price of Priceline is going up. And we're using Priceline because it's an expensive stock. If we believe Priceline stock is going up, here's our available investment choices. We can buy or sell stock, buy or sell calls, or buy or sell puts. So, if we believe the stock price is going up, what should we do? Well, if you pick these three things, you're learning. There are three ways we can make the investment if we believe a stock price is going up. We can buy stock, we can buy a call option, or we can sell a put option. So, why might we choose one strategy over the other? So here's Priceline, and here's the last price of Priceline right here, $1,145.50. So, if we buy one share of stock, that's what it cost us, $1,145.50. Obviously a very expensive stock. But let's say we want to buy 100 shares of stock. I think you see where this is going. 100 shares of stock is going to be 100 times that price, and it's going to be almost $115,000 for 100 shares of stock. Youch! That's a lot of money. But what other choices do we have if we believe the stock price is going up? Well, remember, we can also buy a call. So let's look at that. We're going to go here, and we're going to buy a call. And for now, we'll see why later, but we're always going to buy the call that's directly below where the stock price is. So in this case, we see the stock price is $1145.50, and the closest call I can get to below that is $1145. It's only 50 cents below. So that's the one we're going to choose to do. And on this software, it's broken down a little differently. In this software, that's the bid price, this is the ask price, and here's the mid price. And what do we like to buy or sell things at? We like to buy or sell things at the mid price, right? We don't want to pay too much for something. So you can see the software defaults to the high price. Okay, we're not going to fall for that trick. We know the mid price is $47.40, and that's what we're willing to pay for it. So we're going to go over here to where the price is and forcibly put in $47.40. And now let's take a look at this option. So now we're buying one Priceline option. We're buying the $11.45 call price. Remember, because it's directly below where the stock price is. And you see here, we've typed in it's $47.40. But here's the important thing to remember, and this is where it comes into play. What have we learned about one option? What does one option equal? Well, we know now it equals 100 shares. But up until now, that hasn't meant much to us. But now it should, because what that means is if $47.40 is the per price share, then the actual price of the option is going to be 100 times that because it's 100 shares. So one call option in Priceline is actually $4,740. Very important to remember. Every trade software is the same. Whatever number you see on the trade page is just the per share price. But remember, one option equals 100 shares. So we're always going to multiply that per share price by 100 to get the actual price of the option. So in this case, one call option in Priceline is actually $4,740.